Hello, everyone. Thank you for joining our webinar today. My name is Jamal Khan. I'm a senior tax partner at Churchill Tax. I've got my senior colleague, Alan Milne, who's a chartered tax advisor, a chartered accountant with over 30 years of experience in tax advisory roles. Today, our main topic is the tax exemptions that apply to the main residence, and how some people can get trapped in these exemptions, and how some people can take advantage of this. But we do get a lot of cases where people assume by default that if you live in a property that you don't have to pay tax. So Alan will take us through the details. And for people who are buying and selling properties, this is a very important session for them to kind of see and understand, to avoid problems with HMRC at a later stage. Over to you, Alan.
Thank you, Jamal. Good morning, good afternoon, everybody. Are you seeing my screen?
No, it's not showing at this stage. If you just share your screen, I think.
Right, is that better?
No.
Hmm? Sorry for the slight technical. Is that visible now?
Yes, that's visible. If you want to start from the beginning and start the slide showing.
Yeah. Okay. Right. Well, good afternoon, and thanks for attending the webinar. Yes, as Jamal says, we are talking about today changes to the tax exemption for the main residence. Yes. Firstly, a brief word about ourselves, about Churchill Tax Advisors. We're a specialist tax advisory firm based in London and Essex, and we offer national coverage. We specialise in tax law, including income, business and inheritance tax planning, tax investigations, HMRC dispute resolution and tax tribunals. We cover Code of Practice 9, Code of Practice 8 and POCA investigations, VAT and stamp duty planning, inheritance tax and capital gains tax planning, research and development tax credits, UK and offshore trusts and tax planning, and disclosure of undeclared income. So the agenda for today, I'm just going to give you a little background on what is a principal private residence. It sounds like a simple question, but it isn't always. We'll then talk about what is principal private residence relief, and then I'll come on to the sort of the meat of the presentation, which is the changes that have taken place since 6th of April last year. Specifically, these areas: changes to relief for final period of ownership, changes to letting relief, and the introduction of the 30-day reporting requirement. So to start with, what is a principal private residence? Sounds like an obvious question, and I suppose in one sense the answer is obvious. It's the taxpayer's main home. It's where he lives. But surprisingly or not, this is a subject that comes up a lot at tax tribunal as to what constitutes a principal private residence, and there's quite a body of tax case law and to determine what is a principal private residence in any given set of circumstances. Specifically, the principal private residence is treated as including the gardens and grounds of the house, and also what's called a permitted area which including the site of the dwelling house. This is, well, the basic principle is that it's up to half a hectare, but there are situations in which the tribunal will allow a larger area of ground to be treated as part of the permitted area. It all depends on the context, on the size of the house, what the land is used for, what buildings stand on it, and again, it's something that's covered in case law. Principal private residence relief. Now, the UK's capital gains tax regime allows a taxpayer to sell his principal private residence without a charge to capital gains tax arising. It's quite an important principle. There are occasionally murmurings that it may change, but it hasn't, and in my view, it's unlikely to, for the reason given in the second bullet point here, because if you were to start charging corporation tax on the disposal of the main residence, that would mean that people could not make sort of like-for-like sales. They couldn't buy and sell in one place and buy a similar property in another, because they'd be losing the tax on the proceeds, and they would then have to find additional funds in order to stay in the same position. So I think it's an important element of the housing market, and I can't see any circumstances in which it would change. Where a property has not been known as main residence throughout its period of ownership, again, is taken as accruing evenly over the period of ownership, and only those periods where the property was the principal private residence are exempt. So you can get a situation where you, for instance, if somebody's lived in a property and then you use it as a buy to let, then the gain will be apportioned over that period of ownership, and only those periods of time that were part of where the property was principal private residence will be allowed to be exempt for tax purposes. Yes, so moving on, where a taxpayer has more than one property that may be viewed as his principal private residence, he is permitted to make an election as to which home is to be so treated. So, I mean, it's a basic principle that you can only have one principal private residence at any one time. So if a taxpayer is in a position where he has two homes, both of which he occupies to some extent as his private residence, then it's just there is the facility to make an election as to which of those two homes is his principal private residence, and that's down to the taxpayer to make that choice. He has 2 years from the time that he begins to have homes available to him in which he can make that election. Although there are some circumstances in which a longer period is allowed to make the election, but it's probably unwise to rely too much on an extension being granted. So it's a good move to get that election in ASAP. Once you start to have two residences, both of which could potentially be your principal private residence. If no election is made, then the decision as to which is the principal private residence boils down to the facts of the case. So that means that if there's a dispute with HMRC as to which your principal private residence is, and you haven't made that election, you then have to produce evidence that you've lived there as your principal private residence, and this comes down to things like where you're on the electoral roll, where your bank statements come to, where you're registered for a doctor's, you're a local doctor. So it can become a bit of a tussle with HMRC. So the best way to deal with it is with the election within the 2 year period, and we strongly recommend that you do that. Now, coming to the sort of the meat of the presentation, the changes to principal private residence, with effect from 6th of April 2020, there were a number of changes that came into force. Firstly, the final period, or the final period of ownership where a property has been a principal private residence, you are allowed a final period of ownership to be treated as your principal private residence, whether or not factually it was your principal private residence at that time. And this was reduced. This final period was reduced from 18 months to 9 months. So quite a significant cut by half. Letting relief was abolished with the caveat that you can still claim letting relief if you, as the landlord, are living in the property with the tenant, i.e., if the tenant was your lodger, essentially. So that was quite a big change. I mean, a lot of buy-to-let landlords would want to make use of that letting relief, but it's now only available in very restricted circumstances. And the third change was, and this is a more general change to the regime for property taxation. It doesn't just apply to principal private residences. Property sales have to be reported, and any capital gains tax must be paid within 30 days of the sale. Real-time reporting, it's referred to as, and that is a big change and a very tight time scale in which to do the reporting. So to deal with each of these three changes in turn, changes to relief for the final period of occupation. Now, it's always been the case that a final period of occupation has been allowed be treated as deemed period of when the property is principal private residence, even if the property was not so occupied. This period of occupation, or final period of occupation, has been shrinking over the years. I mean, it started out at 36 months. It was then reduced to 18 months, and it's now down to 9 months. So that was quite a valuable relief if you had occupied it, property as your principal private residence at some point. You could have claimed that final period, even if you weren't actually living there at the time. But that's scope for claiming that is now reduced only to the 9 month period. And as I say, that change came in with effect from 6th of April 2020. Secondly was the change to letting relief. Historically, when a property had been occupied as a principal private residence, some relief was allowed for periods in which the property had been let. The amount of the relief was set at a lower of 3 specified figures, 2 of which were worked out on the basis of computation, and then there was an absolute limit of 40,000. That was the absolute maximum relief that you could get. As I say, that was quite a useful relief for buy-to-let landlords, but now it's been restricted to those very specific circumstances where the landlord was living in the property at the same time as a tenant. So, situations where somebody had a lodger. So the relief is still available, but circumstances very restricted. And the third change I just want to touch on is the introduction of the 30-day reporting requirement. This was a big change in the reporting of properties, of gains on properties. Again, coming in from 6th of April, all property sales need to be reported and any tax due paid within 30 days of the sale. And as I mentioned earlier, this applies to all property, not just principal private residence. Now, where a property falls to be treated as a principal private residence throughout the entire period of ownership, there's no CGT due. So in those cases, the the requirement is just to report that there's no tax to pay. But there obviously can be circumstances when a property has been used in a mixed way, where it has been part of the it has been used as the owner's main residence part of the time, and also has been used as a buy-to-let residence. So as I mentioned earlier, there can be some time apportioning, and some tax is due. And in those circumstances, you've now only got 30 days to report that and pay the tax. And obviously you want to get the tax calculation right, because if there are issues, penalties and interest if you don't get it right. So those are the 3 changes that I wanted to speak about. So just to summarise, the regime for principal private residence is complex, and significant changes came into effect from 6th of April 2020. And just to recap the 3 changes, the window for the relief to be claimed for the final period of ownership is now very restricted. It's only 9 months. For buy-to-let landlords, the circumstances in which letting relief can be claimed is now very restricted. And finally, the 30-day period for reporting a sale and paying the tax isn't quite an onerous burden for the taxpayer to have to carry. And just to mention, if you do require assistance in computing again, then please do contact us as soon as possible, preferably before the sale takes place, or as soon as possible after the sale. And that way you can ensure that you don't incur any penalties or interest. So that concludes the presentation. And there's just the contact details of Jamal and myself. And just to mention that these webinars do take place monthly, and you can subscribe on our YouTube channel and join the live webinars. That concludes my presentation, and thank you very much for listening.
Thank you, Alan. That's very useful. I have a couple of questions.
Yeah.
First question is, what about people who have main residence abroad and they have just come to the UK and they sell that property? What would be, how would that be treated?
Well, I mean, as a principle, you can have a main residence abroad, and if that was factually your main residence, then you can still, in general terms, claim it. There are restrictions, though. If you come to the UK and you live in the UK, and you have a property abroad, then there is a day count rule whereby you have to spend a certain number of days in any given tax year in that property abroad. You have to spend 90 days in the property in the tax year in order for you to be able to claim it as your principal private residence. And the other point I think to note is, if you come to the UK, have a property, you acquire property or you rent a property in the UK, then you are in that situation which I referred to with the election, with the election, whereby you've got potentially 2 principal private residences. So it is wise to get that election in. So there is no dispute with HMRC as and when the foreign property comes to be sold.
Excellent. And when the next question, I mean, this is more of an observation that I've had, is when people do claim residence exemption and they don't pay the tax that's due because they feel that they lived in that property, they don't need to pay tax. That can be very dangerous. We've got a couple of cases at the moment, and we might have to go to tribunal on this, is where you've lived in a property and you've then moved out, then only part of the claim, part of the only part of it is of the gain is exempt, not the entire gain. And where we get cases where people claim to have lived in a property but they don't have any proof, for example, being on the electoral register, being registered with the GP locally, having your bank statements, your council tax, everything at that house, and then living there for a reasonable amount of time. There are a couple of hoppers that have made a trade out of buying a house, doing it up, and not paying, selling it, and then moving on to the next house. And they might live briefly at that particular property for a short while, but HMRC has been able to challenge them, and that which means there's no exemption allowed at all. So they've had to pay tax. In fact, they've had to pay a lot of tax because it's not the capital gain; it becomes the trading income. Then. So something to watch out for. HMRC is catching up on people who are abusing the system, should we say? And there have been a lot of court cases where HMRC have taken people to court for wrongly claiming the exemption. This is becoming common, and there's something to be very, very careful with. Sorry, Alan.
I was just going to say that the other thing that can be useful in terms of proving principal private residence is photographs. If you take some photographs of the property to show that it's fully furnished, you're not just sleeping on a camp bed on the floor. That can help. I mean, no single thing is going to be a determining factor, but if you can, take some pictures of the property, show how it's furnished, that can also help to indicate that it has been a principal private residence. Excellent,
that's great to hear. Okay, well, if anybody's got any questions, you can contact me or Alan or anybody in the team, or your usual contact within Churchill Tax. And we look forward to seeing you next month. Thank you.
Thank you.
Bye.